Welcome to HouseLuxe Estate, the hub of smart investment strategies and financial insights. Here, we delve into the fascinating world of finance, dissecting complex concepts into simple, relatable ideas. We explore the intricacies of investment strategies, providing you with a wealth of knowledge to help navigate the financial landscape. Our mission? To empower you with the tools and insights that can shape your financial future. Today, we venture into a topic that's on the minds of many: 5 investments that are recession-proof. Economic downturns are inevitable, yet their impact on your investments doesn't have to be detrimental. There are certain investments that have historically withstood the test of time, proving resilient even during the harshest of economic climates. So, whether you're a seasoned investor or just starting your journey, this video is designed to equip you with the knowledge to make informed decisions. Stay tuned to discover these recession-proof investments that can help safeguard your financial future. The first recession-proof investment we can't ignore is gold. For centuries, this precious metal has been a symbol of wealth and a measure of value. But it's not just the glimmer of gold that has captivated us, it's the metal's enduring value, particularly during times of economic uncertainty. Here's why gold shines brightest when the economy seems darkest. First, it's important to understand that gold holds intrinsic value. Unlike paper currency or other assets, gold's value doesn't depend on someone else's ability to pay. This makes it a safe haven, a place where investors can park their money when other markets are too volatile or uncertain. Now let's turn back the pages of history to see how gold has performed during past recessions. In the early 1980s, for example, the economy was hit by a severe recession. Yet, the price of gold surged, providing a valuable hedge for those who had invested in it. Similarly, during the Great Recession of 2008, while many stocks plummeted, gold prices soared as investors sought safety in the precious metal. In addition to its historical performance, gold has another trick up its sleeve. It can act as a hedge against inflation. When the cost of goods and services rise, the value of money can fall. But gold, its value often increases during periods of inflation, helping to preserve the purchasing power of those who hold it. Think about it this way. While the price of a loaf of bread may rise over time, the amount of gold you'd need to buy that same loaf tends to stay more constant. That's the power of gold as an inflation hedge. So, whether you're an experienced investor or just starting out, gold can offer a measure of protection against economic downturns. It's like an insurance policy for your portfolio, helping to ensure that no matter what happens in the economy, you have something of enduring value. So, investing in gold can provide a safety net during economic downturns. And in a world of economic uncertainty, who wouldn't want that kind of safety net? The second investment that can withstand economic downturns is real estate. Now, you might be thinking, isn't real estate risky during a recession? And to a certain extent, you're correct. However, it's essential to look at the broader picture. Real estate is a tangible asset. It's a physical entity that you can see, touch, and utilize. This tangibility provides a certain level of security that is not present in many other types of investment. Even in the worst economic times, your property will still hold value. It will still be a house, or an apartment complex, or a piece of land, and it will still be there, waiting for the market to recover. In addition to its inherent value, real estate also offers the potential for rental income. This has 2 major benefits. Firstly, it can provide a steady stream of income, which is incredibly valuable during a recession when other income sources may be drying up. Secondly, it allows you to hold onto your property during market downturns, as the rental income can cover your mortgage payments and other expenses. Now let's talk about appreciation. Yes, real estate markets can and do fluctuate. Prices can fall during a recession. But over the long term, real estate has consistently shown a trend of appreciation. It's a marathon, not a sprint. A recession might slow the pace, but it doesn't stop the race. Therefore, if you're able to hold on to your property during a recession, there's a good chance you'll see its value increase once the market recovers. Of course, like any investment, real estate isn't without its risks. It's crucial to conduct thorough research, understand the market, and make informed decisions. It's also important to remember that real estate is a long-term investment. It's not about making a quick buck, but about building wealth over time. Investing in real estate can therefore provide both a steady income stream and long-term value appreciation. Our third recession-proof investment is consumer staple stocks. Now you might wonder, what exactly are consumer staple stocks? Well, these are the stocks of companies that produce essential goods. We're talking about the things that people can't or won't do without, come rain or shine, boom or recession. Items like food, beverages, household goods, and personal care products. In the gleaming aisles of your local supermarket or the virtual shelves of your favorite online store, you come face to face with consumer staples. The loaf of bread you buy for your morning toast, the detergent that keeps your clothes clean, the toothpaste that brightens your smile, they all fall under consumer staples. Now here's the real kicker. During a recession, when many other sectors take a hit, consumer staples often hold their ground. And here's why. No matter how the economy is doing, people still need to eat, clean, and maintain their daily routines. There's always a demand for these goods, and that's what makes this sector recession-resistant. Companies that produce these goods, therefore, often see stable revenues and even growth during economic downturns. These are the giants like Procter & Gamble, Johnson & Johnson, and Coca-Cola. Their products are in homes across the globe, and their stocks find a place in savvy investors' portfolios. Investing in consumer staples stocks is not just about weathering the storm, though. It's also about the potential for steady, reliable returns. These companies have a history of strong performance, and many also offer dividends, which can provide an income stream on top of potential capital gains. So if you're looking to build a resilient portfolio, one that can withstand the ebbs and flows of the economy, consider adding consumer staples stocks to your mix. It's like having an umbrella that not only shields you from the rain, but also catches the sunlight and converts it into a steady glow. Investing in consumer staples stocks can thus provide a steady return even during economic downturns. The fourth investment that can weather a recession is healthcare stocks. Now let's dive into the reasons why. Healthcare is not a luxury, it's a necessity. No matter the state of the economy, people will always need medical services and products. This means the demand for healthcare tends to remain stable, and sometimes even increases during tough economic times. Think about it. When the economy takes a hit and stress levels rise, people might need more healthcare services. And let's not forget about the aging population. As our society ages, the need for healthcare services grows, making healthcare stocks more valuable. Moreover, many healthcare companies have strong, recession-resistant business models. These companies often have steady revenue streams from a diverse range of products and services, which can provide some protection against economic downturns. Therefore, healthcare stocks can offer a degree of stability in your investment portfolio during recessions. And that's why they make our list of recession-proof investments. The last but not least recession-proof investment is utility stocks. Now, what are utility stocks, you ask? Well, these are stocks of companies that provide essential services. We're talking about electricity, gas, water, all of those services we can't live without. Now, these companies usually perform well during recessions. You might be wondering why. Well, it's pretty straightforward. Even in a recession, we still need to switch on the lights, heat our homes, and of course, use water. The demand for these services remains stable, regardless of economic conditions. Utility stocks are typically considered defensive stocks because they tend to maintain their value during difficult economic times. Investors often flock to these stocks as a safe haven during periods of market volatility. By investing in utility stocks, you are essentially investing in the consistent demand for these services. Investing in utility stocks can thus provide a steady return even during economic downturns. To recap, we've discussed 5 recession-proof investments today. First, we delved into the shining allure of gold, a classic safe haven that historically holds its value even when economies falter. Then we explored the sturdy world of real estate, which can provide steady rental income and potential appreciation even during economic downturns. Moving on, we unpacked the value of consumer staples stocks, the companies that produce the everyday goods we can't live without. These are the goods that consumers buy regardless of economic conditions, making these stocks a solid choice during recessions. Next, we touched on healthcare stocks. With healthcare being a necessity, these stocks can offer stability and potential growth even in challenging economies. Finally, we highlighted utility stocks. As consumers will always need utilities like electricity and water, these stocks can provide a steady stream of income. Remember, diversification is key in investment. Don't forget to subscribe to House Lux Estate for more insightful investment strategies. Until next time, make your money work for you.